Good afternoon, guys. It's Working, bringing you a very quick update on Bitcoin. Hope you guys are having a wonderful weekend. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And last time we spoke, guys, in fact, I'm going to go in here to the 4-hour chart. Last time we spoke, guys, Bitcoin's operating within this small little wedge here. I told you guys that we were reaching the apex of that wedge, which was very uncommon for a wedge. In fact, I told you that that would very likely mean one of two things. Either this wedge will be completely invalidated. Once you get that close to the apex, again, one of two things happens. Either the wedge is completely invalidated and price moves sideways, or price ends up breaking down. Very rarely does it get that close to the apex and end up breaking up. It does happen sometimes, but it's rather rare. And what happened was within about, I think, 5 hours of my last video, price ended up breaking down here. I told you guys that probability did favor the downside due to it being so close to the apex there, and I told you that I was going to be entering a trade I had my buy order stacked between 3,600 and 3,550. Now, price, unfortunately for me, price did not break down low enough to get my buy orders filled. It only broke down to 3,650, so I was about $50 off, and then price ended up breaking down, nice long wick, right back to baseline at 3,800. It sat there at support right of a $3,800 support, and so this was a nice stop hunt down here. And then it sat there at that $3,800 support for about another 12 to 16 hours, and then we had another stop hunt in the other direction. Price broke up to about 915 or 39.15, and then right back down to baseline, again bouncing right on top of that $3,800 support. So basically both things happened. Price did end up breaking down, it returned to baseline and moved sideways, and has been bouncing on top of that $3,800 support ever since. As of right now, guys, it looks to me like price is very likely getting ready to move again in the next 24 to 48 hours. The fact that we're getting it's consolidating here so tightly. In fact, if I come over here and I look at the let me zoom in here to the 4-hour chart. Looking at the 4-hour chart, guys, we can see that the Bollinger Bands are extremely constricted here, and it's not just anytime you see the Bollinger Bands getting this tight, it does suggest a larger move to come. And not only are you seeing the Bollinger Bands constrict that tight, which this is probably about as tight as I've ever seen them, you're also seeing on top of that the 8, 21, and 55-day EMA all converging literally almost right on top of each other, which again is extremely rare, does suggest a larger move to come. Zooming out here to the daily, we can see that price was able to maintain itself for the most part right above that 21-day EMA. We had a very brief break below the 21-day EMA and then right back above, and it continued to hold as a very strong support. We didn't have a daily candle closing below the 21-day EMA since my last video, which again was a very bullish sign. That being said, it was unable to decisively break above this 8-day EMA either. So again, getting a trading here within a tighter and tighter range between that 8-day EMA and the 21-day EMA, also suggesting a larger move is to come. All right, looking at the daily chart, guys, obviously we can see that price from this point to this point, obviously price created a higher low. If we look at the exact same thing on our MACD, let me get the RSI out of the way here so you guys can see. This is again on the daily. If we look at the exact same thing on the daily MACD, we look at the histogram at the exact same point. What do we have? Obviously, we have, let me zoom in here so you can see a little bit better. Obviously, we have the histogram creating a lower low. That's obvious divergence. This being this clearly being a temporary uptrend here. We're looking at the bottom, so that's going to be hidden divergence. We do have some hidden divergence, and in this case, it would be hidden bullish divergence. So suggesting that price may break up. Now, if it does break up, guys, in my opinion, I do think there's a good chance it would be a temporary breakup in price. So I can see a scenario where price breaks up. Now, obviously, we do have a very strong resistance here between 4,000 and 4,120. I've talked about this at length in my past videos. We just have to look in the past here to see that prices tried to break up decisively above this and has been unable to since since December. Now we wicked above it just briefly, but we haven't had a decisive break above again since December. So this should act as a very strong resistance, and I would think if price does end up breaking up, I would think that we're going to get a temporary break up in price, and we're going to get a reversal either at this order block right here at about 3,900. If it does break above that, guys, I can see a reversal between 4,000 and 4,120. And like last time, guys, when price broke up here, as I told you guys that this was a good opportunity to short, I do think if price breaks up again up in this area between 4,000 and 4,120, this is going to be another shorting opportunity, and I'd be targeting 39 to 3,800 if it does break up into this area. Now, one of the things I'm going to be watching very closely is volume. Right now, volume is sitting at about at about 7.5 billion. That is relatively weak volume, guys. If I'm looking at just the last couple years, especially if I compare this to the bull market, obviously this is very, very weak market compared to the bull market here. But in the last couple weeks here, in the last few weeks, I should say, this is still a nice uptick. If we look at the beginning of the year, guys, the late last year, beginning of this year, volume was on average about 5 billion, 4 to 5 billion. And we can see that that has been the case the entire time. With every now and then you see a breach above, or on February 7th, we had a nice breach above to about 7 billion, and then of course it dropped right back down. But on February the 17th, we had that breach above 7 billion, and then we had also a nice increase in price, and then we had that follow through where volume it didn't drop back down to that 4 to 5 billion, but it actually maintained itself above 7 billion, and it's been above 7 billion ever since that breakup on February the 17th. Obviously it's fluctuated quite a bit, going as high as 10.7 billion, but never getting any lower than that $7 billion mark, which is overall a nice little uptick in volume. That being said, we aren't seeing the consistent daily volume above 10 billion that I've been telling you about. Once you see consistent daily volume above 10 billion, by consistent I mean at least a consistent week above 10 billion, every single day above 10 billion, then you're going to know that new money is entering the market, and at that point I'll be comfortable calling a bottom. So we're not seeing that kind of volume, but we are seeing a good uptick in volume, enough to certainly get some notice. And enough to make me think that, yeah, a bottom could be in. And if we can break up, I bring all that up to say, if we get into this area, if we break into this area between 4,000 and 4,120 with significant volume, in other words, if we get into this area with volume at 9.5, 10 billion, 11 billion, I'm certainly not going to short that. If we get into that area with that kind of volume, guys, then at that point I'll probably more than likely go long. And if we break above 4120 with volume, a decisive break above 4120, not a wick, but a decisive break by a decisive, I mean a daily candle, both opening and closing above 4120. If that does happen, at that point, guys, I'll be very comfortable saying that a bottom is very likely in. But until that happens, this resistance is extremely strong, and I have to believe that if price does break up, this resistance is very likely going to hold, especially if volume is low. If we break up and volume is low, this is a must short, in my opinion. In my opinion, you're just leaving money on the table if you don't short with low volume, if price breaks up with low volume. But if price does end up breaking up here, guys, this is a very logical area to short. Again, don't get greedy. I'd be targeting 39, 3,800. If price does end up breaking down, I'm going to be looking for $3,600 to hold. And if price breaks below 3,600 decisively, at that point, guys, I think it'll be a very quick drop to 3,400. Looking at the daily RSI, this also would back that possibility of a temporary breakup in price followed by an immediately drop in price. Looking at the daily RSI here, what do you see? Well, if you were looking at price, you would very likely see it right away. But a lot of people don't understand that some patterns that you see on price in the chart on the chart. Excuse me, guys. On the candle, if you're looking at the overall chart, guys, and you're analyzing candles, you see a lot of different patterns. One of the patterns that people look for oftentimes, especially in a bear market or a bull market, is a inverse head and shoulders or a head and shoulders. And this looks like the possibility of a possible head and shoulders pattern where price breaks up, hits that $4,000 support, and then breaks right back down. Now that doesn't mean this is going to happen, but it certainly looks like it's setting up for a real possibility that could happen here. So we'll have to wait and see how this plays out. If the RSI is able to maintain itself above this support area right here, so if we can maintain above 50, in my opinion, that would be a rather bullish sign. Even if we break up and if price breaks right back down, if it can hold above 50 on the daily RSI, that'd be a rather bullish sign. Right now, the RSI is looking rather bullish. The fact that we were able to come up, get to extremely overbought, and then come right back down and maintain itself above 50, again, that was a rather bullish sign. It's certainly something that's getting my attention. But this is something that I'm going to be watching rather closely. All right, guys, zooming all the way out on the monthly chart. Obviously, we're continuing, obviously that we are still in an extremely bearish trend. I show you guys this all the time, but for the benefit of those new viewers, we're in a very clear downtrend. Probability favors to the downside. Probability always favors the trend until the trend is broken, and right now it has not been broken. That being said, yet last month, February's candle was the first green candle that we had seen since for about 7-8 months, since July of last year. So that's not insignificant, guys. And the fact that as of yet, we're only in day 2 of the month, but the fact that we have this nice long wick here, we had that on January's candle and also on February's candle, but February looking a little more bullish, obviously, than January. And if we can get that follow through in March, if March's monthly candle can close green, that'll be the first green, back-to-back green candle that we had since the bull run in 2017. So that would, again, not be insignificant. So this is something that I know a lot of people are going to be watching, especially for the overall trend, to see if we have, in fact, possibly bottomed out. All right, zooming in here to the weekly chart. Looking at the weekly chart, guys, last week's candle, even though it closed green, last week's candle, we had this very, very long wick here, guys, which would suggest a possible reversal. We had about 3 weeks or 4 weeks of a nice little uptrend here, and then we had this long wick, again, suggesting a possible reversal, and we were expecting a collapse right back down below that $3,600 support. That's not what we had. We had, again, this weekly candle for this week. We've only got about 24 more hours in the weekly candle, but so far it's maintained itself in the green, and it's held up much better than a lot of people were anticipating. So again, this is a rather bullish sign that we are seeing this. If we can get this weekly candle to close in the green, excuse me, again, that would be a rather bullish sign. Doesn't mean that the bottom is in, but again, it's one more little piece of the puzzle, one more little bullish sign to suggest that maybe the bottom is in. We'll have to wait and see kind of how it ends up playing out. But never forget the overall big picture, guys. Again, zooming out on the weekly here, never forget this overall big picture. This is still a downtrend. This little uptick in price over the last month or so, or excuse me, over the last, well, since we had that spike back in late December, came all the way back down to that 33.50, and then continuation up in price. You know, all of this has just been a small little blip on the radar when looking at this. I know I say this in every one of my videos, but I'm repeating it again for the benefit of those new viewers and also to hammer it home. We are not in an uptrend. This is still a downtrend, and you need to be very, very cautious with your money. Doesn't mean you shouldn't dollar cost average in. Absolutely. If you want to dollar cost average in for the long haul, this is not a bad time to do it. This is not a bad time to accumulate very, very slowly. But we are not in an uptrend. The bulls are not back, and we have not broken the overall bearish trend that we've been in. And zooming all the way back out, guys, as I've shown you guys, you can see there's not a lot of support between 3,600 and 3,000. So you can see a scenario where price quickly falls down to that $3,000 to $2,500 area very, very quickly, possibly even down to that our support at 1,100. There's a scenario where that happens. I don't think that's probable, but it is possible. And if you want to know more about that, you can catch my prior video. All right, guys, I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.